Good afternoon and welcome to the Freedom to Buy podcast presented by SuperNet. I'm Joe Dworsky, the president of retail banking for SuperNet. And each week, our podcast will take you behind the scenes of banking, finance, payments, and technology to help educate both businesses and listeners like yourself on how to make the most of your purchasing power in the world of credit and cannabis. My next guest has over 30 years of experience building and restructuring multinational organizations around the world, with a strong emphasis in the consumer healthcare sector. He also brings extensive experience with state regulations and compliance in all areas of cannabis cultivation and dispensaries. John has served in all levels of executive management, primarily in the cannabis food, manufacturing, and construction industries. Currently, John is the co-founder and CEO of Greenlight, a vertically integrated multi-state operator with 3 in-house brands, over 230,000 square feet of cultivation and manufacturing, and more than 650 employees. Through John's experience in scaling businesses, Greenlight is tracking over $230 million in annualized revenue and is positioned to have 40 dispensaries opened by Q1 of 2024. Please welcome to today's show, John Mueller, co-founder and CEO of Greenlight. John, welcome and thanks for joining us this afternoon.
Well, thanks for the intro, Joe. I look forward to the segment here and always appreciate what you guys do for the industry.
My pleasure. Glad to have you. Okay, so let's just, before we jump into learning more about Greenlight, I'd like to take a step back so our listeners can learn more about John Mueller and your early days in your career and how it led to founding and running the day-to-day operations of Greenlight.
So my brother and I have been 50-50 partners since I basically got out of college. So we started in a USDA processing facility that actually started in our apartment. That we couldn't afford to pay for, and grew that up into the second largest smoked meat company in the country at the time, doing 2 million pounds a month and 180 employees and all kinds of fun. So that I really see that as my kind of getting my MBA in business and basically being a serial entrepreneur. And since then we've done all kinds of deals from tech deals to road construction in the Ukraine, Russia, China, and everywhere in between. We've done a whole bunch of troubled asset turnarounds and workouts, and where we go in and kind of fix the company and buy them from banks and turn those around and sell those off after we made them profitable. And then we basically got into cannabis, and effectively 2015 out in Nevada was our first big one. We made a minor investment in California prior to that, but that was our first big launch into the cannabis industry.
Okay, great. So the Mid-American Capital is the business that you were talking about in terms of the different investments?
Yeah, we use that as kind of our parent and our deal flow. And then obviously each one of those is broken off into, different segments as my brother and I don't stay too focused for too long, unfortunately. We've done better nowadays, but back in the day we would look at every deal and like most of them, sadly.
Okay, I hear you there. Okay, thanks for that informative and very interesting overview, given the background of how you got to where you're at today. Let's jump into learning more about Greenlight and what was the catalyst to entering the cannabis industry and co-founding Greenlight, if you can share with our audience.
Yeah, like I mentioned, we got our start in Nevada and won our licenses out there. It was supposed to be just making investment. The next thing you know, I'm moving the wife and 3 kids out to live in Las Vegas and built up that operation out there. So we had about a little under 300,000 square feet. At the time was the largest dispensary in the country. We did some really cool stuff with our farmers market and, cannabis museum and all kinds of different things coming from outside the cannabis industry. And being the newcomer, we wanted to do something creative and interesting and drew a nice crowd. And then we opened another dispensary. Then we opened another 270,000 square feet over in California. And in March of 2019, we ended up selling those 2 operations to Curaleaf, the largest operator in our business today. It allowed us to come back home. We're born and raised in St. Louis, both live in Kansas City now. So it allowed us to come back home and really establish Greenlight in what we call our Cannabis 2.0. So we made a gazillion mistakes in our Acres and Eureka deal in our first version as we were trying to limp our way through it. And thank the good Lord, we're making a few less now with Greenlight. And we built this up relatively quick on what my peers would say is not a lot of financial investment. We've been fortunate to go out and win a lot of licenses and then also be profitable along the way. And we just have a little different way of doing things than some of my peers.
Interesting. Well, that kind of segues to one of my questions that I had for today's discussion. You said you made mistakes along the way. Obviously, we all, have mistakes that we make in business, and we learn from those mistakes. But in terms of entering this business, what has been the biggest surprise that you didn't expect in deciding to enter the cannabis industry, and the biggest obstacles to getting to where you're at today?
Yeah, I think you look at it and as we mentioned, kind of that vast experience from, figuring out how to get road construction equipment into Russia or the Ukraine or all that other stuff, and the legal and the regulatory and all that other stuff. I figured that was a good basis for a lot of knowledge of, just how to run a business, et cetera. And it turns out cannabis is the hardest business to operate in, from a, federal illegality and, regulatory environment, growing something that's living, and also touching that consumer and making sure you have an impact on their life. And so I look at that experience that I had before, and it's all helped me to get here. This is by far the hardest challenge that we face is basically setting up and being, profitable out of the gate when you have crazy tax rates and all those other things that come into our business. So I think, the big learning lessons and things have gotten a lot better actually from, when we started out in Nevada. I would be bouncing payroll checks and things you don't think about in, a widget business, but you do in a weed business is, not having that banking on a daily basis and running cash around. We pay vendors and counting out cash back, and all that stuff's kind of went by the wayside nowadays with a bunch of third-party compliance firms and things like that. So we have more traditional, that the armor car picks up at the dispensaries today that didn't happen back in those days. So the industry is definitely developed, and, whatever, we're at $25 billion today. So it's come a long way in really a short period of time. And then obviously if we get rescheduling, it's going to change the whole game completely.
Absolutely. Well, you've hit on a couple of more questions that I wanted to discuss. And just continuing on this topic of some of the obstacles and surprises, given the fact that it's not approved on a federal level, there are obviously complexities and unknowns in being in this industry. What would you say is the most critical aspect in running an MSO such as Greenlight on a day-to-day basis, given the regulatory hurdles that you currently encounter?
I think, obviously protecting the license is always first and foremost, so, each state is, as I say, is about 90% the same, because obviously we're growing a plant, we're tagging a plant, we're testing a plant, and we're selling something in a jar or whatever. But so all that's generally the same, but it's that little 10% in between on a compliance and making sure you're following the rules and regs associated with that. And then obviously you got a lot of consumers, we'll have, 20,000 consumers walking through the doors today to buy something, being able to touch those people, make sure they come back and they will wear our G, and we're branded up, and, basically making sure that consumer experience is perfect every time. But, I think that the main one is obviously protecting that license and ensuring that your guy's always in full compliance and we can track every gram plant that's grown in the facility. So without the license, you basically have nothing.
Obviously, that's a big task, I would imagine, given Greenlight's footprint currently. You're in Arkansas, Illinois, Missouri, Nevada, South Dakota, and West Virginia. Looks like Missouri is, you have the biggest presence in the Missouri market. And I see that you've had tremendous growth since recreational sales were legalized a little over a year ago. Can you talk about, the change in that marketplace? Because there's been tremendous growth that you guys experienced. That is, huge numbers.
Yeah, no, it's obviously the fastest growing market to $1 billion, which is kind of our claim to fame in Missouri. I think a lot of that is you look at what's on our borders around it. So, the 6 million people in Missouri is a lot of consumers, but also what are you touching? And the people in Kansas that have no access to marijuana, Nebraska, Iowa. And then you also look at, basically the Arkansas, very limited, which we operate there as well, but, very limited medical down in that market. So it's allowed this to skyrocket. And the way a ballot initiative state like Missouri allowed us to put in those in front of the voters was, a system that set us up for success. And, you really have an industry that's all rowing in the same direction. And the way the dispensaries were dispersed across the state, you don't have to go too far to pick it up. But also those stores, there's not an overwhelming number like there is in Oklahoma of the world, where you can, throw a rock from one to the other. It's allowed to spread across and pick up all those rural communities and also, the cores in Kansas City and St. Louis and places like that. But you got a whole industry that's rowing in the same direction. And really another big part of that is the regulator is not trying to put us out of business, which is sometimes the case in other markets. So if you got a regulator that, is kind of following the will of the people, you're going to end up winning.
Interesting. Well, looking at that market, expanding on my first question, I understand that. I'm not sure which location this is. One of your locations is doing 100,000 per day, 4 million per month, which is just a staggering number. Can you talk about the success of this particular location? What's been the key to this location's success?
It's not quite to that number on a monthly basis, but it is the number one store in the state. Obviously, that happens to be right, a 9 iron away from the Kansas state line in Johnson County, which is a more affluent area of the state, and that's in just a little pocket over there has allowed that store to flourish. And obviously, we want to keep those people coming back there and make sure they have access to the products we're offering there. So it's been a great store, but it's a very unique location, right on the Kansas border.
What type of competition do you have in that area?
We've got two that are coming right down the street. Not right down the street, but 30 blocks away. You could go another 2 miles to another guy. So there is competition around there. We've done a good job of branding, marketing, et cetera, to make them get in and out of there as efficiently as we want to, or they could stay in there for hours if they want and talk to a bud tender about their ailments, et cetera. But the main one is we try and build their business and work on nanoseconds on how quickly we can get, the mom that needs to run in because her kids are in the car and send them through a drive-through or pick up window, or, if she wants to get in and out of there, we've got to be able to cater to those people first. And then obviously we can spend as much time as somebody wants to.
That makes sense. I was doing my research and along my travels of researching for today's show, I read something that you are seeing 3,500 customers per day in this particular location. Is that correct?
That would be like a Friday. It's a Friday, Saturday type number. I wish
getting ready for the weekend.
Yeah, I wish that was a Tuesday. Yeah, no, I mean, obviously that store does tremendous, and we got some other stores that are not there, but are gaining on them. So it's a very good market right now. The state's done a good job of not, over flooding the market with licensees.
So, with that much traffic and that type of volume, how do you overcome, or what are the obstacles with banking, if you will? Obviously, there's a lot of headlines about rescheduling 280E and safe banking, more specifically. But with the types of volumes that you guys are doing on a monthly on an annual basis, how has the banking landscape impacted business, if it has, because it sounds like you guys are doing tremendous, and how will the rescheduling 280 and safe banking, when that finally passes, benefit the business?
Yeah, like I kind of mentioned, like right now I've got, just in Missouri, I got 4 traditional FDIC banks that pick up our cash at the store, armored card, just like they would for any other, heavy depositor, and take it to the Fed, drop it off. It ends up in my bank the next day. So that's much more traditional than it was before. We pay some extra fees and things like that, $1,600 a month to clear those compliance per bank account, which you have to have one for each licensee, et cetera. So there's extra fees associated with it. But, looking back in my history back in Las Vegas, like muling money around and worrying about, who's following you, et cetera. Those days are kind of done for a bigger operator like us. And then obviously clear all the compliance hurdles that it's not a black market deal. I do, obviously, everybody in our company's fingerprint and everything else. So all those hurdles are kind of accomplished. So but it's much more traditional. And because we're, a bigger MSO, no debt, profitable, doing dividends for my shareholders, we have a surplus of cash too. So we're actually doing deposits and getting interest on that money today. So very, very traditional, much more traditional than I think back in the olden days. And then as you look at, obviously, safe banking would eliminate some hurdles. I think mainly it's just an opportunity to uplist some of the publicly traded companies. It'll take a little pressure off some of these banking operations. The biggest one for us is obviously the rescheduling, which I think is, months away, not years away. It's still pinned in April is my guess. I don't know if I'll be right or wrong. I'm optimistic that that's like in any day. If they announced it today, I would not be shocked. If they announced it in a year from now, I would be, overwhelmingly disappointed that the Biden administration didn't push that through. So I think that's a foregone conclusion. It's coming. Equities and stuff are not priced into that. But I think that really is going to change our game a whole bunch. It basically cuts my monthly tax bill in half with 280E calculation. So, it's millions of dollars a month and changes. And basically, and then I think, you'll see some of the, NASDAQ and NYSE are going to start uplisting some of these equities where, then they have, they're more in line instead of trading at 5 or 6 times earnings, like they are today, which is crazy. In a growth industry like ours, it's going to double. It's going to trade more in the 12 to 14 times earnings numbers. So I think those things are all coming. We're really excited about rescheduling mainly because of the 280E elimination. And I think that's going to be the biggest catalyst. And it also will allow some of these other, venture funds, PE firms. I think you'll see, a whole bunch of the big boys start stepping in once we get rescheduling as well. Mm-hmm. And you'll probably see a bunch of consolidation.
Okay, that's great. Well, 2 follow-ups on that topic. You talked about, with the rescheduling and 280E, that will help you on the tax perspective. Can you talk about the stacking of taxes? Explain to our, audience what stacking of taxes are and how that has impacted the business, to date.
Yes, specifically on 280E, basically, we're treated as the cocaine dealer, if you will, or heroin dealer. And so what they did is they set that up to catch the gangbangers out there, so they couldn't expense off that labor that was associated with selling the products, but they did allow you to expense off your cost of goods. So we are generally taxed pretty close at the gross profit area instead of like a, net income area. So like depreciation goes away, your marketing expense goes away, the time our humans are spending on selling products all goes away. But if our guys are cultivating at a grow facility, you can't expense that because it goes into cost of goods. So whenever you're handling inventory or anything along those lines, the average person listening today, it's really almost a tax at gross profit. There's a few other ones you can grab from your SG&A and bring them up, but like depreciation, interest expense, all that stuff's non-deductible today, which if we get rescheduling, moving to Schedule 3, which will, just so everybody knows, will still be federally illegal. I think the average person out there will hear the news. There'll be a big headline on CNN and every other network when this comes out. But we still don't have FDA approval to actually sell our stuff. So it would be like, we'll be classified with Tylenol, with codeine, with the rescheduling. But it's as if Tylenol never went out and got that approved by the FDA. Mm-hmm. So we're going to still be in this little bit of a gray zone, but it's a lesser gray zone, if you will.
Well, 2 follow-ups there. With the rescheduling, in your projections, what kind of increase in sales would you see due to rescheduling? And on a federal level, what are your thoughts about passage of federal cannabis passage?
I think there will be a reduction in price per gram for the consumer when that comes in there because people kind of build in this extra tax. And obviously, when there's a reduction per gram, it just chips away at the black market. So, I think over time, you'll see a complete elimination of black market. Maybe not a complete, but more than we are today. Obviously, we're over $1 billion in Missouri. All those consumers were, smoking or vaping something prior to us setting up a program here in Missouri before that. So we see every dollar that we're attaining as a dollar that is not going into the black market. So I think when the price per gram comes down to a certain level, then all of a sudden having something tested, higher quality, all of a sudden, taking any risk on the black market makes no sense. I think we will chip away at that, coming from the feds. I think the rescheduling took a little wind out of the sails for safe banking. So I think that's going to, has a longer tentpole associated with getting safe banking done. I think everybody's kind of waiting for rescheduling. Then the average consumer is going to think it's federally legal, and then safe banking becomes less of a political football.
Mm-hmm. You have any thoughts on federal legislation, being passed? I mean, your thought was with rescheduling, you think in April. You think, federal, a year, 2 years, 3 years, and any thoughts? Or
no, I would hope it. I don't think it would happen this year with the general election coming, just because people don't want to be on record, and some of those are going to point to the Biden administration that those bad guys rescheduled. So I think that political football gets kicked into 2025. But I think there'll probably be something done in 2025 on safer banking, as it's now dubbed. I don't see any, real federal legalization where California is shipping to Missouri anytime soon. So I think my kids will be worried about that, not me. So that
doesn't seem like, it doesn't seem like it's impacting your business and the growth that you've been seeing at Greenlight. Can you talk about a little bit about the growth and what your vision is in terms of expansion into other states?
Yeah, right now you kind of listed off the 6 states we're in today. We actually have a whole bunch of deals pending in Ohio, which is another state that's going from medical to adult use. We're going to expand there. We like our chances of being successful down in Florida here when they announce the winners down there and have a good ground game down there. Like everybody, we're going to continue to expand the business, and we've done this since basically the beginning of 2020, and have grown to, or 670 people, I think today is the magic number. And those 40 stores are coming, and about 300,000 square feet of cultivation. So we're going to continue to expand, continue to be vertical. We're pretty frugal though. So we use, net income to basically expand our business. So we want to continue to be debt free and use our internal cash flow to continue to expand the business as much as possible.
So is your expansion primarily organic growth, or if you're doing from net income versus you're not doing, you don't have any debt? Are you making any acquisitions, or are they small acquisitions through net income? How is your growth really happening?
Yeah, no, we're buying a bunch right now. There's a lot of people that took on high teens interest deals, and we like troubled assets. So being able to step into some of those licenses, convert them to green lights, is one of our things we're doing a bunch of right now. Generally speaking, we're not doing any mergers or with any other smaller guys rolling them into us right now. We're basically buying their operation. So we got a ton of M&A. I think I've got 7 of them on my plate right now that I owe back to people. But we're being very aggressive. It's a unique opportunity. It's kind of the calm before the storm once we get rescheduling, I think.
Mm-hmm. With the growth that you're seeing, as you said earlier in the show, this is the most focused, I guess, you and your brother have been on one particular vertical. It seems like it's the right one to be focused on based on the growth that you've seen and the opportunities and prospects going forward. With that, I mean, what is the vision of an exit or going public for Greenlight? Is that something down the road, something that you're thinking about in terms of the public markets here in the U.S.?
Yeah, we're prepping for that. We would not want to do the Canadian deals like all of our peers. We would wait till NASDAQ or NYSE were available, and then obviously we're always looking for strategic partners that are good operators as well. We talk to all those folks on a regular basis. We really see it. The cannabis industry is like getting into the liquor business right after Prohibition here. We're going to double our business. Obviously, the alcohol guys are scared to death of our industry as it's coming up, and all those guys are continuing to look at when they want to get into this industry versus sitting on the sidelines. So, and I think it's a better consumer experience. I know it's a lot better for me to pop a gummy than it is to have my Tito's. All the industry stats are we're going to double, and I think we can do a little bit better of that. And when you're 22% of the alcohol business here in a few years. I mean, it's a serious business. You know, you have a very limited number of players in. So I think you'll continue to see consolidation and the expansion as the tax thing gets unwound and, you know, some uplisting, and we don't have this crazy stuff going through Canada, et cetera.
Mm-hmm. Interesting. What are you, in terms of, you know, cash versus credit? Obviously, that has been an obstacle within the cannabis industry. There's no pure credit solution. You have some, you know, debit cards and whatnot, but how has that impacted your business, being predominantly a cash business? And how would you say a pure credit solution would help the business going forward?
Yeah, I think everybody, you know, will obviously MasterCard and Visa, you know, shut that switch off. So, you know, we have debit terminals. It's 62%, I think, of our total business in the store. And then obviously ATMs in the store. Obviously the consumer is used to it. Why we have to do it. You know, the debit terminals really have relieved that stress. But, you know, obviously with safer banking, I think you'd see MasterCard and Visa finally rip that Band-Aid and want to see that revenue start flowing through there. So I think that's coming. And then, you know, like we're getting more and more traditional. Like I will do a property mortgage, you know, with FDIC type rate at, you know, 6.5%, 7% on dirt, which they'll do for a cannabis company today. You know, like getting, you know, some of these ones where you're kind of betting on goodwill and earnings and things like that, you know, people are still getting credit in, you know, the high teens today because it's a rough market out there and it's not easy.
Mm-hmm. It is not an easy market. It is very challenging, to say the least. Before we wrap up, I just want to segue to a little area of conversation that I like to, you know, talk about with successful CEOs like yourself. Everybody's always interested in understanding how you got there. You know, we talked about your journey, but more importantly, the success and failure. Everybody has success and failure in their lives, and many times failure is what helps them become better, so they get to that success. Can you talk about, you know, your biggest career successes and the journey that it's, you know, provided for you, and how much of your success would you say is luck, and how much is attributable to timing?
I think I look back and, you know, like I would say I always wanted to own my own business. So I've actually never had a real job since college, being a waiter. So I've never actually signed the back of a payroll check, you know, that I didn't sign the front of. So it's always been, you know, kind of in the DNA for my brother as well. So I think that's part of it. And each one of these has been, you know, a little lesson along the way. And, you know, we buy truffled assets for a living, and not all of them work. You know, we got more wins than losses as you look at the portfolio of stuff we've done in our careers. But each one, you know, thickens the skin a little bit. You realize how tough an individual can be as far as, you know, where your stress pain point is, and the things I stressed about, you know, in my cannabis, you know, 1.0 back in Nevada, you know, where I'd losing all my hair and everything else, and you know, working 12, 14 hours a day at least. All those things seem minuscule today now that I've, you know, got a big team, and, you know, you surround people, you know, good people around us, you know, that are actually taking the blunt of this. But you realize how, you know, through those failures, you realize how tough you can end up in the end, and the little things now are easy decisions. You know, we kind of pride ourselves on, you know, no matter how big we get, you know, we still want to be the serial entrepreneur that, you know, worries about, you know, that one consumer experience that was bad in my store and why that happened. And when they walk in, what do they see when they look on the floor? They, you know, what's my, you know, bud tender wearing, et cetera. So I think we always want to keep that entrepreneurial spirit and not be a corporate company. It's just not in our DNA here. And I drill that into our entire team that, you know, we've always got to be innovating and basically at the end of the day, take care of the consumer, and they'll take care of you. So I think all those life lessons of, you know, getting beat up a little bit and stressed out, and, you know, my wife thinks I'm crazy. It's built, you know, what you know, obviously we think is a generational type company. Who knows what the next one is? So
okay, no, that's a great answer. I mean, let me try to pinpoint, see if was there one failure that stands out over your career that has really helped shape you to become a better leader and a better CEO?
Well, I think, looking back at my barbecue one, we sold that one for stock to actually a Canadian company, which is interesting. That's where you need to sell your stock today to in the cannabis industry. And long story short, they completely tanked that business. So I saw, my 5 years of work going from, basically the apartment and grinding all the way to, 180 employees, a couple million pounds a month and built a really nice business. I saw that all basically disappear. From where I thought I was going to be extremely wealthy at a very young age, coming right out of college, 26 years old, and then seeing that all go away and seeing the people leave and being able to go in there and just grinding until you find a solution. So put enough effort into anything, I think there's always a solve.
Okay. Well, thanks for sharing that. I think that's very eye-opening for our listeners. I understand you're involved with several charities. Before we wrap up, I would love to, have our listeners and learn more about some of the charities you're involved with, if you want to talk a little bit about that.
Yeah. We try and do, obviously the bigger we get, the more we're able to do, which is fun. I lost a sister-in-law, also father-in-law to, I lost him to brain cancer, but breast cancer with my sister-in-law is one of the things that we love to support. Mainly that's all local in the Kansas City area where we can see the impact as I used to sit down there at KU Med and watch her go through the pain and suffering there. And that's one of the big ones. My brother mainly heads up our veterans program. Those are the two big ones. And then we also do Big Brothers and Big Sisters, seeing those kids turn around. Those are the three big ones. And then obviously we do some minor ones, and we give some discretion to each of the local markets, how we get involved. And I think it's critical whenever you have scale in that we're in the chambers and we're in, all these little ones. And I found out, with our cultivation out in Amargosa Valley, like they sit up there in city council and they complain about, a $15, utility bill for the phone at the city council. And you can make an impact with not a lot of money in a bunch of these rural areas. So we found that very, very rewarding to help in some of the local communities where, a big check in St. Louis or Kansas City doesn't really mean much, but some of these rurals are a lot better. But, really the breast cancer thing, the veterans thing, and Big Brothers, Big Sisters are the three that we try and lean into the most.
Well, that's great. It's always good to give back. And I'm glad we got a chance to share that with our listeners today. Well, this has really been great having you on the show today, John. I hope you enjoyed it. If our listeners want to learn more about Greenlight, yourself, what's the best way to do that?
Just go to greenlightdispensary.com is our main website. And if you're really bored, then just basically Google John Mueller and Greenlight. And there's a bunch of other broadcasts out there. I try and be as interactive with all these shows like yours as much as possible. And hopefully your listeners can appreciate them. Shoot from the hip and kind of tell it how I see it. Sometimes I'm right, sometimes I'm wrong. But at least I'll give you my opinion.
Okay, that's fair. Well, thanks, everybody, for listening to Freedom to Buy, presented by SuperNet. You can listen to past episodes of Freedom to Buy on Apple Podcasts, Amazon Music, Spotify, and Google Podcasts, as well as CannabisRadio.com. Please join us next week to learn more about your freedom to buy. Thank you, and have a great afternoon.